All right. Hello, everyone, and thank you all for joining us during the Lytham Partners 2021 Investor Conference and what we're aptly calling our 2022 Vision Event. My name is Robert Blum, Managing Partner of Lytham Partners, and during this upcoming Fireside Chat, we welcome Acorn Energy, ticker symbol of ACFN on the OTCQB, and their Chief Executive Officer, Mr. Jan Loeb, and Tracy Clifford, the company's Chief Operating and Financial Officer. We'll dive into questions in just a moment, but I want to remind everyone that both Jan and Tracy are available for one-on-one meetings later this week. If you've not already signed up, please send me an email at Blum, B-L-U-M, at lythampartners.com, or you can visit the website at lythampartners.com/virtual. You can click on the one-on-one meeting request button, and we'll get you taken care of. So with that out of the way, let's begin. Jan, maybe to start with you, the fact that you are a portfolio manager, for those that may know you from the industry, as well as obviously the current CEO of a public company, walk through how that process came to be.
Robert, firstly, thank you very much for having us and hosting this call. It all started with a good deed. A friend of mine who's a portfolio manager who owned shares in Acorn Energy asked me if I could go and visit the company on his behalf. I live in Baltimore, Maryland, and the company was headquartered in Wilmington, Delaware, which is about an hour away. And the stock at the time was going down. Acorn was at one point over a $300 million market cap company. So I said, fine, I'll go and visit with the company, that then CEO. Visited with him, went through the company, the portfolio. At that time, they had 4 different companies. And at the end of the meeting, I told the CEO that I thought he was going to run out of money. He assured me that he was not. I said, okay, but if you do, why don't you give me a call and maybe we could do something for you, because he had a couple of interesting assets in the company, but at the time the company was bleeding cash. So I left the meeting and called up my friend, the portfolio manager, and told him that I would recommend him selling the stock because the company's going to run out of cash. And that was the beginning of 2015. Fast forward to about June of 2015, I get a call from the CEO saying that they're running out of cash. Is my offer still on the table? I said, look, I have to do some real due diligence, but if it turns out the way I think it is, I'll be glad to give you a term sheet. And I did some due diligence. And in August of 2015, I gave the company a term sheet where we lent the company $2 million as a senior secured. And I went on the board. In January of 2016, the CEO resigned, and basically there was nobody there to take over as CEO. So I took over as CEO, and that's how I got to the company. I thought it was an interesting challenge for me. It's always easy for a portfolio manager looking outside the company in and criticizing the company. It's another thing to actually be the management of a company and try to make things work the right way. So I like it, and so far it's worked out, thank God, very well.
Perfect. Thank you for that. So with that out of the way, let's get into the company a little bit more. Provide us a little bit of an overview on the company and its products.
Sure. So Acorn Energy is essentially a holding company focused on technology-driven solutions for energy infrastructure and asset management. It's a public company parent of a subsidiary. The operational subsidiary is OmniMetrix LLC. At one point, there were multiple subsidiaries, and one of the actions that Jan took was to basically divest those entities and get down to the most likely asset to generate future cash flow and what could grow and have accretive value to the shareholders. Within OmniMetrix, the operating entity, we operate in essentially 2 segments: power generation and cathodic protection. Our power generation activities provide wireless remote monitoring and control systems and service for critical assets, as well as Internet of Things applications. This segment also includes our AirGuard product, which remotely monitors and controls air compressors. In 2020, we expanded our product line for the PG activities to include an annunciator, which is a device that typically is sold with a new commercial or industrial generator. And it indicates the current status of the generator. That sort of wraps up the activities in our power generation segment. We also have the cathodic protection segment. And in that segment, we provide equipment and services for remote monitoring of cathodic protection systems, such as gas and pipelines, for gas and oil companies. So that's an overview of our general product portfolio as it exists today.
So talk about some of who are some of your customers and what is sort of the go-to-market strategy for them? Sure.
So with regard to our power generation segment, we have both residential and commercial and industrial customers. Historically, OmniMetrix had focused primarily on residential power generation dealers. More recently, we focused on the commercial and industrial segment of customers, while still focusing significant attention on our residential dealers. But we also realize that there's a great amount of opportunity that's untapped in the commercial and industrial area. And that's primarily because those customers don't really have enough exposure to how they can replace certain services that they're currently performing manually with remote monitoring devices. So there's a lot of synergies in that regard. So we've really focused on that area recently. As far as how we go to market, there's a number of different ways that we go to market. Of course, there's trade shows and different awareness opportunities that we can generate, but we do have a direct sales team of 6 folks, including our vice president of sales. We do not use distributors. We think that distributors have a difficult time selling tech-related products. Our sales reps are very versed in each of the products and can, we believe, more effectively explain the relative cost benefit to the customer. And we've had long relationships with the majority of our customers, so it's a testament to this approach. Typically, we have a lot of return business where our dealers will continue to purchase from us, the residential dealers, and now with our commercial customers and industrial customers that typically operate in many geographic markets, there's an opportunity for a lot of repeat business.
You mentioned just a moment ago your salespeople talking about the cost benefit of the products. What is that value proposition of the products?
So our value proposition is twofold, really. There's value to our dealer customers and to the end user customer as well. So, for example, in the power generation segment, we sell, as I mentioned, primarily to dealers that then sell to an end user. And that gives our dealer an opportunity to have an additional revenue stream that they can then sell. We sell to them at a price they're able to sell to their end customers with their own profit margin incorporated. So that gives them an opportunity to have that additional revenue stream. But then also with respect to the end user, the value proposition there is very attractive from a cost benefit perspective because they can, as I mentioned just a moment ago, replace certain manual procedures that they have had to hire additional bodies for, as far as truck rolls to go out and monitor the performance of equipment and the flow of the pipelines and gas lines. They can now use our equipment to do that, our devices and our IT monitoring service to do that remotely and not have to have the cost, especially now in a time when fuel is very expensive, gas is very expensive, labor is very expensive. So there's a lot of value proposition there. Additionally, just from a finance and accounting perspective, since that's near and dear to my heart, our equipment lasts for a number of years. Sometimes it can last for 10 years. It depends on the environment that it's put in, but that allows them the opportunity to make these purchases in a capital purchase budget and be able to, from a GAAP perspective, be able to amortize that over a period of years and not have to take that expense to their financial statement at the time of purchase. So that also makes it lucrative. The fact that our equipment is very sturdy and they can get significant life out of it, anything from 3 to 10 years.
Jan sort of gave a little bit of background, but in November, I think it was 2019, there was this transition of senior management at OmniMetrix, right? With the two of you being appointed CEO and COO. Since the two of you took over, what internal changes have you made to strengthen the company, I guess?
Okay, great. First, the very first thing that we did was identify and hired a very strong and seasoned vice president of sales He started in January of 2020, and despite the challenges of COVID, was really able to maintain sales and also grow it in double digits in 2021. So that was, we believe, a great add to the team there to really have that expertise that he had in the industry and a very strong leader. And so we believe that's one of our greatest adds since we took our role. But additionally, we've made some other personnel changes. We've made some additional positions that we've added to better support our customers and also better support our products. We took certain focused steps to reduce general and administrative expenses. We reviewed contracts, we renegotiated rates, we obtained more competitive quotes on certain routine services that we received. We also sublet some office space in our building that we weren't using to reduce our monthly lease payments. So a lot of different aspects like that to really carve down our expenses that were not accretive to our actual customer. We also focused on collecting past due accounts. There were some past due AR. We implemented some new process and procedures to ensure timely collection of AR moving forward. That has been very successful. We also figured out that we really need to look at a lot of the manual processes that had been being done there in the past over the years. I'm a big fan of working smarter and not harder, especially in the current labor market that we're in. So I worked with the team there to really look at a lot of the manual processes that were in place. How could we leverage technology, since we are a technology company? How could we leverage technology to work smarter and also provide better service to our customers? I've been working with the IT company, an IT consulting firm, along with our internal team this year to work on a couple of projects that will make us more agile as we grow. We have a large number of monitor connections. And of course, as those grow, the demand on the data grows. And so one thing we've been focused on this year is really positioning ourselves in our database infrastructure to make sure that we're ready for 2022 and for continued double-digit growth. So we've been working on a new cloud-based database infrastructure and also our interface, our user interface. We've redesigned a new user interface for our customers to make it more functional and also more user-friendly. And we're really excited about both of those projects, and they will launch. We've been working on them all this year, and the scheduled launch is first quarter of 2022. So we're really excited about those. And this is, as soon as we launch those, we're going to continue our momentum because we believe that, there's a lot of things that we can continue to do to make sure that we're always on the forefront of our technology and offering our customer more for their dollar. Our staff is always coming up with ideas on suggestions on how we can work more efficiently, and also on ways that we can strive to exceed the expectations of our customers from a service perspective. So we've accomplished a lot, I believe. But I'm also excited because there's still low-hanging fruit that we're always focused on. How can we be better, and how can we, add more value for our customers?
Yeah, that was excellent background. Some of the operational changes that you've made here. Let's talk about growth, right? What are some of the keys to the growth strategy to grow this business going forward?
Sure. So as we previously mentioned, we believe there's significant untapped potential in both the PG, the power generation, and the cathodic protection segments to grow our portfolio of commercial and industrial customers and also residential dealers. We'll continue to focus on, part of our strategy is continuing to focus on our customers that we have had to continue to add multiple units for them, instead of just single locations at a time, because we believe that's where we can add the most value. Large retail, big box customers who need backup power generation. That's where we've gotten a lot of success here in the latter part of 2021. Also, we're going to continue to build our sales team. That's part of our growth strategy. While I did mention that we have 6 sales reps, certainly the United States is large, and 6 sales reps can't certainly tap all of the markets that would be available to us if we had more sales firepower behind us. So we want to add some more expertise there, and we're planning to do that in the first half of 2022 so that we can have a broader scope across some of the markets that we really haven't been able to to really scratch the surface of, I would say. We're also something that we do that our VP of sales really wants to do more of is offer trials. So if we have a customer that is interested, but they're not certain they want to make the investment, they want to, ride the bike a little bit before they buy. So we do have a trial program where commercial and industrial customers can get a trial unit installed for 90 to 120 days before they make a larger purchase commitment. So we're going to really try to focus on our trial program as well. We've stated many times in our earnings calls that one of the key components of our growth strategy is to identify and close on an accretive and complementary acquisition, but for a price that makes sense to our investors. So we've looked at many possibilities in the past, several years since Jan and I have been involved with OmniMetrix for our shareholders. But at this point, they have been, overpriced, and ultimately the proposed economics just didn't ultimately make sense for our shareholders, or the products were so far out of our wheelhouse that it ultimately would have cost more money in the long run. So we'll continue to aggressively seek an acquisition because we do believe that that's the most effective way to grow the company at a faster pace and a more significant rate, in addition to the double-digit organic growth that we do believe we will achieve.
All right. Jan, at the beginning, you talked a little bit about the balance sheet. Let's talk about it as it sits today and, the financial wherewithal to carry out the growth strategy.
So right now we have about $2 million in cash and no debt on our balance sheet. We have very good relations with our banks and Wall Street. So if we would like to go out and make an acquisition, which would require some capital, we feel very confident that we can raise that money. Obviously, as Tracy just said, for an accretive and smart acquisition. We've looked at acquisitions anywhere from $6 million to $50 million. And we've had no problem in talking to financial partners to accomplish that. So for the right acquisition, there is capital available, and our balance sheet is strong for our internal growth. And so we think we can easily carry out our growth strategy with our current balance sheet.
Are there what are the biggest things that could potentially derail the growth strategy that was just sort of laid out here?
Well, I can do that, Jan. Certainly the same challenges that face, all companies right now, market competition from larger companies that use leverage to manipulate and force the choices of their customers. Also labor and supply chain challenges. Certainly access to capital could change. The inability to identify, as Jan mentioned, an appropriately priced acquisition target, that would stymie our ability to grow as well. But we're not really intimidated by these challenges. We feel like these challenges are they were present in 20 and 21 also, and we were still able to overcome those things and achieve the double-digit growth. So we're still feeling bullish about our plan for 2022. And we feel like, if you lined us up with a lot of the companies that we compete with and some in our arena that we don't directly compete with, we've done a really good job, I believe, of trying to look around the corner and plan accordingly for demand and that type of thing with the supply chain constraints as well. Certainly we've had challenges just like everyone else, but we have tried to be very proactive in the way that we're dealing with it and also be flexible.
Okay. Most investors presumably have not heard of Acorn Energy, and my suspicions, if they have, they think you're an oil and gas company. Do you have any plans to sort of gain more investor recognition here going forward?
We certainly do. We've said, and for the last 4 years, we've actually gotten shareholder approval to reverse split our shares. We have not done that because we're waiting for the opportune time to do that. We would like to gain a NASDAQ listing, which will most probably change our name somewhere down the road. So as you said, people don't think we're an oil and gas company. So we definitely, so to speak, from an external factor, think that we will get our name out and people will recognize us. for what we are, and we'll get more investor recognition. Hopefully, we'll also attend some, high quality conferences like this one, and allow investors to get educated about what we do. And I think that just by virtue of our growth, and I think people will be very excited to see, we've said that we're going to grow at 20% a year is what we believe, or better, over the next few years, that people will come to recognize and say, this is a very, very interesting company.
On that topic there, I think, and I believe you mentioned this on your last conference call, that, look, you feel the shares are undervalued. Talk about some of the reasons why you think that is the case.
So there are a couple of reasons why I believe we're undervalued. Firstly, we'll take some of the external factors. Number one, as you just mentioned, the name of the company. Number two is, I think people don't understand our accounting that well. So we report in GAAP basis, and that's the way the company has been doing it for, since it started. And but in fact, that undervalues and our growth and our numbers. The way we look at it on a cash basis. And the difference is that on a GAAP basis, we amortize our sales of equipment over a 3-year period and our monitoring over a 1-year period. So in times of good growth of the company, the GAAP numbers lag what the true growth of the company is. So I think that, and when we put out our press releases, we do show what the cash numbers is, in our earnings call, we do mention what the cash numbers are. So people focus on that. I think they'll get a better feeling for the true value of the company. And obviously we're, on the OTCQB. So I think, we can't get institutional investors right now. So those are some of the external factors why I think we're undervalued. But more important than that, I think, are the internal factors. And number one is, we've said that we have a significant, over 50% of our business is an annual recurring revenue stream. This is high margin, 90% plus recurring. And for example, this year it'll be approximately $4 million of revenue coming from the monthly monitoring fees that we achieve. If you just think about that for a minute and just say that $4 million of revenue, and just say, a 75% profit on that number, that's a $3 million cash stream that has over 90% recurring and has a growth factor in it. If you just think about what cap rate you would put on that, I think you'd get to say a 7% cap, or that would mean we're sitting on a $45 million value just on our recurring revenue stream. So I think people don't understand, because they haven't looked at it, as to the great value of our recurring revenue stream. We also have $70 million of net operating loss carry forwards. And also, we have this corporate structure of Acorn Energy, and then we have the operating structure of OmniMetrix. So in our corporate business, corporate expenses about $900,000 a year, and that kind of covers over the value of OmniMetrix and the profitability of OmniMetrix. OmniMetrix by itself because it has a 70% gross margin, has a tremendous amount of incremental EBITDA on our ongoing sales. So as our sales grow, and we've said 20% plus, our profitability really moves very quickly upward. So if you kind of combine all of those factors, I think you'll see that we are significantly undervalued currently.
Fantastic. Let's, we're calling this our 2022 vision event. A question I've been asking folks is, what are the key milestones that we should be looking for in 2022 that's highlighting the traction that you're gaining? And if we were all to sit down again 12 months from now, Tracy, you mentioned a couple of the risk factors a moment ago, but what are some of those risks to achieving some of these goals that you might set out here for 2022, and to whoever wants to address that?
Sure. I'll make a couple comments and then we'll see if Jan wants to add anything. I think we've kind of spoken about it, woven through the earlier questions as it relates to our growth strategy, which is certainly driven off of what milestones that we want to achieve in 2022. As Jan mentioned, and I said also previously, one milestone would, of course, being able to continue a double-digit 20% growth in revenue. That's quite an achievement. And so certainly we set that milestone again for the next year to be able to do that. Jan also pointed out that, we have such a significant gross profit margin, it's 70% plus. And it's important to note that 50% of each revenue dollar, drops to the bottom line, to the EBITDA line. So that's a pretty significant measure. We want to continue that. So that's a milestone in 2022 that we want to ensure that we're able to continue. And that's, of course, means that we also have to contain costs, and we have to continue to make smart decisions to leverage our operations as we have carved it back and tried to make sure that we were efficiently operating. We'll continue to keep our eye on the ball in that regard. Also, as I noted, one of the milestones that is part of our growth strategy is making sure that we do hire additional sales talent in the right markets, and that we're really taking advantage of where can we provide the most value to our customers, whether it be on the West Coast in California, where power generation has it oftentimes a greater value because of all the challenges that they have with power outages and fires and those types of things, and also in Texas in our CP business, make sure we're appropriately have the appropriate presence in that market, since oil and gas is predominant in that market. We are constantly working on research and development. You can see that in our financial statements. We invest a significant amount of operating cash flow in research and development. We're constantly soliciting feedback from our customer base to make sure that it is driving our R&D in the right direction. And as by virtue of that, we will be introducing a new product in 2022, what we call the RAD, the Remote Alternate Current Mitigation Disconnect product. But we just like to call it the RAD because most people can remember that easily. So we're excited about launching that. And I fully expect, with our engineering team keeping their nose to the grindstone constantly, and they're very brilliant engineers, very entrepreneurial, and constantly coming up with new ideas. I fully expect that by the end of the year of 2022, we'll probably have something else ready for market. But right now we just have the launch plan for that. So we're really excited about that milestone. So if we turn back to your last point on the question, which was the risks, I think we've talked about those as it relates to what could derail our growth strategy. It's really the same risks. We're a small to mid-sized company, but I also think we're very lean and practical. So as I mentioned before, the supply chain constraints, the labor challenges, the new product acceptance, we sort of talked about those. Those are the same risks to our growth strategy that there are risks to achieving our milestones in 2022. But, as I said before, I feel like we and our team, we have a great team across the board. We have a lot of very loyal employees that have been with us for a long time. Our sales team has been with us. We've added a few, but we've had several of the 6 that have been there for many years, and they really believe in the products and have long-lasting relationships with our customers. So we really feel like we're well positioned to accept those challenges and risks.
Fantastic. Well, is there anything else that? Go ahead, Jan. I apologize.
Yeah. So it kind of, I just like to focus a little bit on some of the gross milestones in 2022 from our operations that people should, I think, focus on. Number one is that just in general, we are in a very hot space. So backup generation, right now, you cannot buy a generator without a significant wait time, because as Tracy said, the electrical grid is suffering from significant problems. So people are buying more and more backup generators. That's obviously very good for us. So our general market is growing. Analytics, because we monitor those things. So monitoring, analytics, I have, today, I remember, 5 years ago, we had to educate people about monitoring and analytics. Today, everybody wants to have monitoring and analytics. Today, people see that we save gas, and people are more attuned to the environment. And so through monitoring, we're certainly a green company. So I think we have a growing market. I think we, in 2022, hope to gain market share. In our business, we're most probably the largest independent monitoring company, and there are a number of our competitors who are smaller than us. Because of our size and our balance sheet, we've been able to buy inventory, and hopefully the supply chain issues might impact some of our competitors worse than it might impact us. So I'm hopeful that in 2022, we can pick up some significant market share from our smaller competitors. As Tracy said, we have a new product coming out in 2022. And I hope to, if we can not do an acquisition, we are also talking to some people about joint ventures in aligned businesses that might help us as well. So I think we have a significant growth agenda in 2022, and hopefully our investors will see that.
Right. Well, this has been really insightful. Is there anything else that either of you want to add before we wrap things up here?
No, thank you for the time. We appreciate it.
Fantastic.
Thank
Well,
you very much, Robert.
Absolutely. Jan, Trace, thank you very much for your time. We do greatly appreciate it. Again, I'll remind everyone that if you have not already signed up for a one-on-one meeting and you'd like to do so, you can send me an email, Blum, B-L-U-M, at lythampartners.com, or again, visit the website, lythampartners.com/virtual. Click on the one-on-one meeting request button, and we will get you taken care of. We hope you all enjoy the conference. Jan, Tracy, thank you very much for your time.
Thank you.